whole life insurance is a horrible place to put money. Or so they say. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our Myths, Mysteries, and Misconceptions playlist, we're going to address the saying of whole life is a horrible place to put money, because many people are online saying these types of crazy and wild things out there. And I'd like us to just take a step back. If you've listened to our channel for any length of time, you know we discuss becoming your own banker as described in Nelson Nash's book, The Infinite Banking Concept, right? But conventionally, even though whole life insurance has been around for a very, very long time, nowadays there are plenty of voices saying that it's a horrible place to put money. Now let's start with that. So money, I think it's good to look at the fundamentals. Money is a means of exchange, isn't it? Meaning we would take money and we would put gas in the car or groceries in our homes or pay for a vacation, etc. Okay. And also those things are sold. Those things are exchanged for money. So money's just a means of exchange. I don't think that we should just jump right over what money actually is. In contrast, I would say that wealth is goods and services. Goods and services. That's how I would describe wealth. Wealth is goods and services. Money is a means of exchange. Okay. Now, money then inherently necessitates somewhere to put it. Now, conveniently, Nash in his second book, which is called Building Your Warehouse of Wealth, has just that title, which I think answers the question. But let's say you're hearing on one hand that infinite banking is great, and then on the other hand, you're hearing whole life insurance is a horrible place to put money. Now, there is a difference between banking and what you bank with, and that leads us to asking some things, I think, about what is the ideal asset. And I commonly do this in live talks. I will ask folks, and I will do this with you right now. Get pen and paper if you can. I'm going to ask you to pause this video here in just a second, actually, because I think it would benefit you to put your mind to work and write down what you think are the characteristics, the properties. How would you describe the ideal asset? So do that here. Hit pause and write down as many as you can. I'm going to give you over a dozen. I'll go ahead and give you that heads up, but hit pause and write down as many characteristics of the ideal asset as you can come up with. Okay, we're back. So I'm going to give you several, and you just see if these match up with any that you had or if we can get some more. So these are the characteristics, the properties of what I would say is the ideal asset. The ideal asset would have a significant, number one, rate of return. Number two, it would be a consistent rate of return. Three, it would be conservative. It would be liquid. It would have liquidity to it. It would have guarantees, tax benefits, no market volatility. It would have income other than capital gains, because in real quick point right there are two ways to earn money, and that would be people that work and money at work. So income other than capital gains. Number 9, possible creditor protection, inflation protection, control, transferability, easy to manage, no hidden fees or penalties. 15 is reputable, and last, number 16 is private. So those are 16 characteristics that I'm aware of that I would want and that you may want in your ideal asset. How many of those did you have from the list? You probably had some. You probably mentioned some things about growth and taxes and things of that nature, right? So now let's just answer the question, knowing what money is, having described the ideal asset to consider where we should put money, what fits that bill? Is it a hole in the ground? Is it a coffee can? Is it a checking account, savings account? Is it a CD? Is it and here we could begin to list a slew of other options and common ones, conventional ones. Okay, the government qualified plans and all different kinds of things. But that will cross a distinctive line into investments. So I would like to differentiate, and I think we should, between savings and investments. Investing inherently introduces risk. into the equation. So if we're talking about where to warehouse our wealth, considering what is the ideal asset wherein we can put our capital, put our money, because that's the myth and it is a myth. It is a myth. I've lived this out, and I'm explaining now what I've learned, and I'll share my personal experience on why the myth of whole life insurance being a horrible place to put money is not correct. But I'm here to help speed up your learning curve so that you can arrive at that in and of yourself, because what I believe is that when you know what's going on, you'll know what to do. So I just want to shed some light on what's actually going on. And that's why I started with the definition of what is money anyway. You can't eat money. You can't wear money very well, okay? But money is exchanged for those things that we do eat and the vacations and all these different things that we do in life. Everything's financed. Everything's financed. Okay? Either we pay interest or we lose the opportunity to earn interest that we otherwise could have. So we're going to consider where to warehouse our wealth, where to put money. And I think we should address that question of, is whole life insurance a good place to put money? These 16 characteristics, I believe, answer the question for me and for lots of people. So think about a whole life policy here with me for a bit. Does it have a significant rate of return? The answer is yes. Now, here, plenty of people like to jump in right out of the gate, and I'll refer you to our number 4 episode in this series on myths, mysteries, and misconceptions. Number 4, I address the myth that whole life insurance has a bad rate of return, ROR. You'll hear this, that whole life has a bad ROR. I encourage you to check out number 4 on the myths, mysteries, and misconceptions playlist to address that. But it does. When you take in the totality of the other, and this is important, the other characteristics that you also want in the ideal asset, it is a significant rate of return. It's a consistent rate of return. I mean, do we just want a great rate of return one year? No. And whole life policies, when they've been properly structured with a mutual company that pays dividends, have consistent, perpetual growth in those cash values. Is it conservative? Whole life insurance predates me. It predates the automobile, okay? So if you drive cars or have ridden in cars and automobiles, whole life's been around before them. Just food for thought. Is it a conservative place? Is it a safe place? Yes. Because it's guaranteed. Do you know that a whole life insurance policy is a legally binding contract? Legally binding contract. Sounds safe. Liquidity. When a policy's been properly constructed for the banking purpose, yes, you have a significant liquidity, actually, right away, even in a brand new policy. Are there guarantees? Again, I've already referenced it being a legally binding contract. Yes, it has guarantees. Guaranteed death benefit, guaranteed cash value, guaranteed access to that cash value, guaranteed growth on that cash value. And that leads us to tax benefits. So the growth in a policy is tax deferred. Now, that's the growth in the policy, tax deferred. Every premium dollar creates death benefit, cash value. The growth year over year, month over month, day over day is deferred. You can access that growth tax-free. Tax-free. You can access the growth tax-free via policy loans. That's how I use my policies. That's how Nash encourages us to use policies. In his book, Becoming Your Own Banker, that's how you can have tax-free access to compounding capital. And the death benefit at the end of the day is a tax-free transfer of wealth to your heirs or beneficiaries, whoever it is that you designate. So there are many tax benefits to owning whole life insurance. No market volatility. This is an insurance contract. It's not directly tied to the market to ride that roller coaster. Income other than capital gains, we've kind of already described that, but the growth in the cash values of the policy, yes, they're tax deferred. Yes, you can access them tax free, and it's separate from capital gains. It's separate from capital gains. And again, remember, like I've said, there are two ways to earn: people at work, money at work. When money is at work in a policy as premiums, it creates this death benefit. It creates this cash value, and that cash value grows and compounds year over year over year. There's possible creditor protection. This isn't legal advice. I'm just saying that as life insurance predates the IRS, which started in 1913. So life insurance predates the IRS is one big timestamp that I'd like to just throw some perspective on life insurance for a second here, whole life insurance. And each state has different rules, so be familiar with your state. If you own whole life insurance or are considering owning whole life insurance for the purpose of becoming your own banker, there's possible creditor protection because it is life insurance. There's inflation protection. So think about this. In the properly structured policy, when you pay $1 of premium, it can create $2 in the future, $3, $4, $5. So isn't that a great way to address the rising problem of inflation? Now think about this real life example. 50 years ago, what did a candy bar cost? What about 5 years ago? What about today? And then look in the future, right? What might a candy bar cost 5 years from now? 50 years from now. So inflation exists. How can we address it? Well, I would say by paying a premium dollar today, that creates multiples in the future. If we're going to need more dollars for the same candy bar in the future, it does matter where you warehouse your wealth. And whole life insurance is a great place to put your money. So it has inflation protection. What about control? Well, who owns this private piece of property? And that does lead us to a subsequent characteristic when I say private piece of property. But who controls this? I do. Who controls whether I pay extra premiums or not? Because with a properly structured policy with a great mutual company, you can pay extra premium dollars into your system. Well, who controls that? Me. I do. If I need to only pay the minimums, who decides whether I pay the minimums on this properly structured policy? Me. I also decide that. Maybe there's a time period where I can't fully fund my regular scheduled ongoing premiums fully. Perhaps I just pay the minimum on that particular contract. Who determines that? Me. I do. And everything from the start. Who picked the premium amount from the get-go? I did. I picked the premium amount that I wanted to pay into all the policies that we own. And we own a system of policies. We've practiced this concept for the better part of a decade now. So you are in control of your financial environment by becoming your own banker, by using these policies for your banking system, your private banking system. It's a transferable asset, so there's transferability with the whole life insurance policy. It's like a 1 or 2 pager from most insurance companies, so it's a really simple thing to be able to transfer that private property to another individual, a family member. For example, if I own a policy on my child and I want to transfer it to that child when they come of age and they are ready to be using their policy, the policy that was on their body, they were the insured, I can do that. I can transfer it to a trust. I can transfer this private property like I would any other property. Is it easy to manage? Yep. With a phone call today, I made a call to make a policy loan today. It's that easy. With a phone call, I verify who I am, of course, and I get asked 2 main questions. How much of what's available do you want us to send to you, Jesse? And how would you like us to send it? Check in the mail, direct deposit into your bank account. What do you want? And of course, you could log into an online portal. We live in an online world, so very easy to manage. No hidden fees or penalties. See, when I mentioned earlier about the premium, for example, I picked the premium from the start. That's not going to change on me. Now, I've already also mentioned that I can pay, and I do choose to pay extra premiums into my policy, but that's when I want. That's because I want to. But the cost of the policy, if I'm going to use that traditional sense of the word, the expense of the policy, the cost of the policy, the premium amount is not going to go up in an obligatory or a mandatory fashion to be able to maintain that policy in force. Whole life insurance has level premium, so that cost is not going to be rising on me. There's not going to be some additional hidden fee or penalty later on. It is a reputable asset. Again, the longevity of this asset speaks for itself, in my opinion. And where this asset comes from. This asset comes from mutual life insurance companies that have been in business for well over 100 years. And not just in business for over 100 years, but profitable and paying dividends for over 100 years. And then the last characteristic of being private. This is a piece of private property. I don't have to have my credit score checked to see if I can borrow against my policy. This is my private property. I can own it, use it, access it, along with all these other characteristics. So again, we've got more than a dozen reasons why I believe that the properly structured whole life policy with a mutual company that pays dividends is a fantastic place to put money. I put as much of my cash flows as I can into policies. First, that's just our lifestyle of being our own bankers in the Durham household is we put money into policies. And then from there, we are living, we're giving. That's how we operate is we're our own bankers. We've built a system of policies. We'll continue to build a system of policies, but we own several today, multiple policies from multiple companies where we do put our money first. Okay, because this is really addressing banking. Money must be put somewhere. And the folks that are on the radio and the TV and everywhere else, the internet, talking about whole life insurance is a horrible place to put money. Think about this. Think about the significance and the meaning behind these words. Food bank, blood bank, river bank, snow bank. Okay, so a bank is a place where such things are accumulated or amassed, okay? Whether it's a food bank, you're going to have cans, you're going to have pouches, you're going to have, okay? So money is what it is. We've talked about that, means of exchange. It must be warehoused somewhere. I believe that the ideal asset that has all these characteristics fits the bill, so we warehouse it in these properly structured whole life policies with mutual companies that pay dividends. From there, we use our money however we would want to. And think about this. These policies from these mutual life insurance companies, when somebody says it's a horrible place to put money, who is it that's offering these policies? These mutual life insurance companies. And these mutual life insurance companies, how long have they been around? Well, over 100 years. Okay, all the great ones, over 100 years. Well over 100 years. Now think about this. How many of those mutual life insurance companies have defaulted on the death benefits that they guaranteed on these whole life insurance policies? I'll give you a second. There's your drum roll. Zero. Because even if a life insurance company were to become insolvent, the other insurance companies in that state where those contracts are being held would have to buy them out, would have to meet the financial obligation of paying the death benefits to those policy owners. Okay, so the death benefits have always been paid on these whole life insurance policies. But we're not just here for the death benefit. That's great. We want to check that box for sure. But also the cash values. So think about the cash values because we're talking about a place to put money, meaning for the use of it. Okay, so the cash values, well, don't those increase year over year with these mutual life insurance companies? Yes, they do. Okay, so they've always paid the death benefit. The cash values continue to go up the way these legally binding contracts describe. Also, the companies that we would encourage you to get policies with and the companies that I personally own policies with, they've paid dividends for over 100 consecutive years. Now, just think about the history that's taken place over the past 100 years. World War I, World War II, the Great Depression, the dot-com bubble, Y2K, Vietnam, Korea, the housing crisis of '08, so many different things, okay? So many different things. And these insurance companies have paid consecutively dividends for over 100 years. The company that I called today to make the policy loan from, just one example, 147 years. 147 years. I haven't been around that long. You haven't been around that long. We probably haven't been around that long together, okay? If we combined our ages. So we should answer this myth, I believe, considering all these aspects. What is money? Where should it be warehoused? Where is the ideal asset? Where does that ideal asset come from? For me, it comes from these mutual life insurance companies. And remember, I am talking about where to warehouse your wealth. I'm not talking about investing of any kind. Again, that's a different category. We're talking about where do you save your capital? Where do you amass your capital? Where do you store your capital? From where do you deploy your capital? And when you know that you could do it in a fashion that gives you all of these different characteristics of the ideal asset, I believe with logic and reason, okay, and a little bit of imagination, stepping outside of the noise of the conventional financial wisdom, we can see for ourselves that this idea of becoming your own banker and this product of the properly structured policy is the best match for those of us that are looking for those ideal characteristics. And this is what we've done for the better part of a decade now. Like I've said, we've used this private banking system for everything from financing family vacations, paying off $50,000 worth of consumer debt when we first got started, property taxes, land deals, all different kinds of things. Now, let me give you one of the favorite phrases that I have from R. Nelson Nash in his book. Compared to what? So when you're thinking about the ideal asset and trying to answer the question or address the myth of whole life insurance being a bad place to put money, a horrible place to put money, think about this. Compared to what? Okay. Here's the example Nash uses in his book, and then I'll describe some real life examples when it comes to the ideal asset. Nash says an airplane flying through the air experiencing a headwind, of course, is going slower than it otherwise could, right? So that headwind typifies the interest that the average American is bleeding out. I mean, we're just bleeding out interest dollars for everything that we're doing in life because everything is financed, and either we pay interest or we can earn interest, okay? So if an airplane experiencing a headwind is on the left, and then on the right you had the same airplane experiencing a tailwind, it would be going faster than just a plane through still air, correct? So that's where he's trying to say that, well, becoming your own banker is how you can create a perpetual tailwind, financially speaking, to control your environment, okay? So again, we're thinking about where to put money, where to amass it, where to save it, where to build it up, where should that capital reside. I'm saying the whole life policy. But if you want to answer the question, well, compared to what? Start putting in those things. Where could it go otherwise? A hole in the ground? Under the mattress? In a savings account? In a coffee can? In a checking account? In a CD? Okay. Now, you will get to some point where you would cross over into the investment world if you start saying things like IRAs, 401k, stocks, bonds, mutual funds, things of that nature. Okay, things of that nature. That's a different category. When we introduce risk, when we enter the investment world, that's not what I'm talking about. I'm not making any conversation at this moment on investing. Now, if you want to use your private banking system for the things that you do in the investing world, great, fantastic. I love it. That's actually the way to be exponentially more profitable potentially, because when you're banking and investing, okay. But I'm talking about saving. I'm talking about where to warehouse your wealth, where to put your money before you deploy it for some intended purpose. A coffee can. Take one of those 16 characteristics from the ideal asset and compare the coffee can to the whole life insurance policy. Well, if I put money in a coffee can and I put money in a whole life insurance policy, I can go and get to the money in the coffee can. So let's say it meets the liquidity characteristic that we want in the ideal asset. Just like the whole life insurance policy, I have liquidity right away. But something I don't have, just to make one clear example, just one, could make several, is the whole life insurance policy also has that big death benefit. The coffee can has no death benefit. So while they both have liquidity to them, okay, they do not both have a death benefit, and that would make the policy superior. And that's just one particular example. I'm certainly not putting $10 into the coffee can and having 11 show up, right? So, I mean, we could go down the list, but I don't think we need to. And then insert anything else that is a savings tool, okay? And take one example here. Let's talk about CDs. I'm hearing a lot more, and I heard this when I was growing up. I heard a lot about put your money in CDs, and then there for a long time while we were in that super low interest environment, you didn't hear so much about CDs. But now with interest rates having risen up, we are hearing more about them again. I'm even getting emails and the types of things you probably are too about, well, put your money here for the next 6 months, 6 years, whatever, and we'll give you this rate. And rates are a bit up, but think about this. Aren't we taxed? Let's just take another one of those examples. Aren't we taxed on the growth that we earn in a checking account, in a savings account, in a CD? Don't we pay taxes for that growth? Right. Okay. And this isn't tax advice. I'm just asking questions. Don't we pay taxes on that? Okay. But do we pay taxes on the growth in a policy? That's tax-deferred growth in a policy, and tax-free when you access that capital either in policy loans or withdrawals or the death benefit when it's paid out. Tax-free, okay? So huge difference right there. And again, we could go down the list of those other characteristics, but I believe you begin to see that when you decide, yes, I would like that significant rate of return. Yes, I would like liquidity. Yes, I do want guarantees. Yes, I do want to have income other than capital gains and all those other things. I believe we arrive at accepting the properly structured policy as the ideal product. And when we implement the process of banking with that product in this new paradigm, you see what I'm doing there? I'm giving you the philosophy, the product, okay? The paradigm of becoming your own banker. It's a complete game changer. It's a complete different lifestyle. So I would encourage you to continue in your education on the subject. If you have any questions, don't hesitate to reach out to me. You can jump in my calendar and my schedule. This has been a great pleasure for me. I would encourage you to check out my free presentation on the website before we talk. It'll speed up your learning curve. It'll be helpful. And you have your questions ready so we could walk through what it could look like for you to implement the infinite banking concept for your household, your business, or your investing. But this has been a great pleasure for me. I look forward to our next conversation. Have a great day.